Nikore, as well as technical analyst Brajesh Ali on the show. This is Morning Brief at 9, and before we get into the headlines, the top story coming in this morning. A total of 6 schools in Delhi have yet again received bomb threats via email, prompting a multi-agency response. A thorough search of the premises, according to officials. This follows a series of similar threats on December 9th, which had been declared hoaxes by authorities. The affected schools are Bharatnagar International School in Paschim Vihar, Cambridge School in Srinivaspuri and DPS Amar Colony in east of Kailash. Fire services, police, bomb detection units and dog squads have been deployed to secure the areas. In response, school authorities have instructed parents not to send their children to school while checks are ongoing. To get the latest on this story, I have my colleague Yash Goyal joining me live this morning. Yash, take us through what we know. What is the latest on these new round of bomb threats?
Well, Karthik, at this juncture, we can confirm that the number of schools have actually increased to 6. Earlier in this morning, when the initial details trickled in, the number was around 3, and now the number stands around 6. The police is following all the SOPs which are laid down when it comes to tackling such situations. The school's premises have been cordoned off by the police. A thorough sensitization of the area is being done by the cops at this very juncture, and what we are also understanding is that all the classes for the students have been shifted to the online mode. Remember, this is not the first time when such threats are being received by the Delhi schools. In fact, last week only around 40 schools had actually received such calls, and the police is there on the ground, the fire brigade. The dog squad has also been roped in for investigating this very particular matter, and now we are still awaiting a response from the cops exactly what were the contents of the mail. But what we are understanding at this point from our sources within the Delhi police, that this particular email highlighted one thing, that you check everywhere but you don't check at one place, which is the school bags of the children who are coming to the schools. So once again, a call given in the same old fashion. The modus operandi is similar of the last time, and this time around also the modus operandi remains the same. Thorough investigation is currently on the ground. All the coordinated efforts are being made by the police to get a better understanding of this very situation.
Right. Yash, is it too early to assume that these are hoax threats, or is there more to the story which is being investigated right now?
Well, looking at the modus operandi, earlier also similar kind of modus operandi was followed by these people, and in this case also an email sent to the schools threatening them that there is a bomb in your premises. This is a same old-fashioned thing which these fraudsters, if we may call it, are actually committing. But police officially has not deemed these calls hoax at this very point. But looking at the kind of situation which is panning out and the kind of the contents which we have able to access, it might be a deemed hoax call, but we have to wait a response from the police and for an official confirmation on this very thing.
We will bring you that official police response. Yash Goyal there in the newsroom with all the updates. Thank you, Yash, for joining us this morning. Let's move on now to the headlines that are making news in the world of business and economy this morning. Let's start with India's retail inflation. India's retail inflation has eased to 5.48% in the month of November, driven by lower vegetable prices and food inflation decline, a relief after October's spike. At the same time, India's industrial output rose 3.5% in October, boosted by manufacturing and the mining activity. Bad news coming in for the Indian rupee. Indian rupee depreciates 1.4% in 2024. Experts predict further weakening against the dollar. And with the election season in the state of Delhi, the Aam Aadmi Party targets women voters with 1,000 rupees monthly allowance ahead of the 2025 Delhi elections. And the IPO street is abuzz. Vishal Mega Mart, Mobikwik and Sai Life Sciences IPOs are open for subscription with strong grey market interest. Healthy demand is expected. And staying with IPOs, Bluestone Jewellery files Draft Red Herring Prospectus with SEBI for 1,000 crore rupee IPO, including offer for sale of 2.4 crore equity shares by existing shareholders. HDFC Bank has received SEBI warning for non-compliance with merchant banking, capital issuance disclosure and insider trading regulations. Meanwhile, Zomato faces an 800 crore rupee GST tax demand, including penalty and interest for non-payment on delivery charges from the year 2019 to 2022. And staying with Zomato, Blinkit has launched Bistro, a 10-minute food delivery app which competes with Zepto Cafe's newly launched rival platform. India's retail inflation has cooled to 5.48% in the month of November, providing relief after October's breach of the Reserve Bank of India's 6% upper tolerance limit. The moderation came as the arrival of fresh produce helped ease soaring vegetable prices. Food inflation, which constitutes nearly half of the CPI or the Consumer Price Index, also dipped to 9.04% in November, down from 10.87% in the month of October. However, rural inflation surged to 9.10%, up from 6.68% the previous month, while urban inflation climbed to 8.74% compared to October's 5.62%. Let's try and make sense of this. Mithali Nikore, founder and chief economist, Nikore Associates, is with us this morning. Good morning, Mithali. Inflation data coming in, one would say hot, not as hot as it was in the month of October. What do you make of this print and what does the road ahead seem like?
So first of all, thanks Karthik for having me here this morning. I think that there is a cyclical element to what we are observing here. So if you look at it, just about 1 quarter ago and even 1 month ago, we were talking about high top prices, tomato, onion, potato. And we were talking about the fact that these top commodities are the ones which are actually leading food inflation, which was crossing nearly 11% and even inching up to 12%. Now, suddenly, we find that, 2 months later, this has actually, slowed down. This has eased up. Food inflation is coming in at about 8 to 9%, which is, a reduction of at least 1 to 2 percentage points. And the overall retail inflation, again, starting to ease up. It was around just a little above 6% about 2 months ago. And now it's come down to below 6%, very much within the RBI's, limit of 4 to 6%. Why is this happening? I mean, one of the major reasons.
Sure.
One of the major reasons is that we find that, there has been, of course, an improvement in the climate. There has been an improvement in, the drought situation, things getting better. But this does not address some of the fundamental challenges of inflation. I mean, this is more cyclical as opposed to structural.
Right. I wanted to, in fact, come to the cyclicality of it, Mithali. But before that, while inflation has come down from double digits to single digits in food inflation particularly, but at the end of the day, we are still talking about inflation and the fact that prices are still going up, although not going up at the same clip as they were growing at earlier. So overall, the problem in the system of high prices, especially high food prices, continues to persist.
So, Karthik, again, here we have to look at it a little bit, on major commodities, vegetables, as well as then, looking at cereals and milk, then we get to that level. And the top commodities, as I was saying, is still something which is like a staple for the Indian diet. Tomatoes, onion, potatoes is something everybody uses. Those are still going up a little bit faster. And where we see the easing is actually coming in cereals, milk, and, fruits and vegetables to some extent. Because again, in the winter season, season, we see that there are fewer disruptions in the supply chain, there are fewer disruptions in the logistics supply chain, and of course the overall production has also eased up. But this doesn't mean that next year this will not happen again. If we have one bad monsoon, one drought, again the system is not free of risks, and we
Right.
need to start improving our supply chains.
Right. Mithali, my simple question to you, and for the sake of our viewers and to simplify it for them, while inflation is still coming above the RBI threshold of 4%, while it is below the RBI's tolerance of 6%, the problem really is, like you're mentioning, it's cyclical, it is not structural, and we are completely dependent on monsoon. So in the wake of the problem being supply side, is there any merit in RBI not cutting interest rates?
So I think, Karthik, this is what we have all been debating for the last, I mean, you and I have been doing this, and we've been doing this with other anchors at News9 as well. We really do not understand why the rates are not being cut in this cycle. I mean, if we look at the GDP data, we clearly found that GDP data for Q2 came in at 5.4%, which is one of the lowest in 2 years. We've also seen that now in this quarter, there's been a little bit of an improvement in the industrial output and in manufacturing. And as I was also saying, even that is cyclical. We need to see more decision making. We need to see the PLI scheme again starting to rev up the engine on manufacturing, but it takes some amount of pushing and decision making and work from Invest India to actually get investors to come and
Absolutely.
commit their funds. So in that situation, you need to make borrowing more attractive, you need to make borrowing cheaper, and cutting interest rates will help to do that.
Absolutely.
Of course, because we need to invest in long-term infrastructure measures to safeguard our supply chains, and that will be one of the better and more lasting solutions to inflation, as opposed to only managing it through monetary policy.
Absolutely. Since you mentioned, Mithali, since you mentioned the industrial output, let's just look at those numbers as well. The index of industrial production, or IIP, rose 3.5% in October, which came in slightly higher than the 3.1% which was recorded in the month of September. Official data has also highlighted that manufacturing output has grown 4.1% year-on-year in the month of October, while electricity generation increased by 2% and mining activity surged by 0.9%. However, these growth rates mark a major slowdown compared to October 2023, when the sectors grew by 10.6%, 20.4% and 13% respectively. So Mithali, is there really much to celebrate about the IIP numbers compared to the same numbers, the same industries in the year ago period?
So, Karthik, if you remember, 2023 was the year in which the PLI scheme was actually launched. And there was a lot of interest in the PLI scheme, the production linked incentive scheme, because, of course, a number of foreign investors were curious as to, what would be the benefits if they come to India, they invest, what kind of back, what do they get back when they invest in India? Of course, it's linked to the amount of output, production, and even exports, right? Where India is trying to incentivize large foreign players to come make lasting investments. And it's a very good scheme. It's it's one of the best schemes designed globally at this point in time. And there are a number of investors who have taken the benefit of this scheme across sectors like smartphones and electronics, and even in electric vehicles, we are starting to see a lot of interest. However, there are certain limitations to the scheme, in terms of the fact that it does not actually ease the environment for what we call as ease of doing business. I mean, there is still, regulatory hurdles. There's still an environment where you need, constant interface with government officials, because at the state level, the implementation of the scheme will not be the same as, the design of the scheme at the central level. So I think somewhere, to make the scheme a lasting success and to actually, have investors benefit from the merits of what is being offered under PLI, states need to come forward and really implement it in letter and spirit.
Right.
And it's only then which we will see the lasting impact of the scheme. Like last year we saw, a kind of a blip, and to say that, oh, people came in, there was a burst of activity, and then now this year again they're realizing, okay, maybe, the benefits of the scheme don't actually give us enough given the costs of doing business.
Absolutely. So stay with that thought. You're talking about foreign investments coming into India, and you're really talking about job creation depreciation and capital expenses being incurred. Explain this to me in the context of the Indian rupee, because the Indian rupee, which has mostly remained volatile throughout the year, has actually now depreciated 1.4% in the calendar year 2024. Now, according to some experts, Mithali, the currency could hit 85 rupees against the US dollar in coming weeks. Now, several contributing factors there. Some of these include foreign investor outflows from local equities, a strong dollar index, weak domestic growth data, and the recent appointment of the new RBI governor as well, which is leading to a lot of speculation. Again, at one level on rate cut, on the other end about the forex operations. So, how do you see the rupee-dollar pair actually moving forward in 2025? And how will investments into India actually get impacted by the changes and the depreciation of the Indian rupee?
So actually, Karthik, we get a little bit worried about depreciation because we look at it often as consumers that I would need to purchase, I would need so many rupees to purchase a dollar. However, and of course, this affects importers. People who are importing, for them, all the imports become more expensive because now they need more rupees to purchase their imports, because all the trade is being done in US dollars. But if you look at it from the point of view of exporters, and if whether it's exporters of goods or services, as well as of investors who are looking to purchase, investment stakes in the Indian market, those suddenly became cheaper. When you have rupee depreciation, when we are trying to sell our exports, it is cheaper for somebody abroad to purchase our services and goods.
Right.
Similarly, if you are a foreign investor, now you get more rupees for your dollars, so you're able to purchase, more of an investment stake in Indian companies. So I would say that, we have to leave this a little bit to the markets to correct. Obviously, the rupee-dollar exchange rate is not only dependent on what is happening in India, but also the strengthening of the dollar overall. Because the dollar is strengthening against many other currencies, with the winning of Donald Trump, and there's a, widespread expectation that the US economy is suddenly going to have, its best years in the next 3 to 4 years.
Absolutely.
So there's also a flight of capital towards, US denominated, dollar denominated bonds.
Right. I want to come to you quickly, Mithali, on a political economy story, and this is coming from the Aam Aadmi Party and Arvind Kejriwal yesterday trying to woo women voters, saying that under the Mahila Samman Yojana, there is going to be, a dole of 1,000 rupees per adult woman in the state of Delhi. At the same time, Kejriwal is saying that perhaps it is not likely to dent the fiscal position of the state and the finances of the state of Delhi. My simple question is, where else is the money going to come from? And in election season, run up to state elections, if these are the kind of promises being made, in your mind, where is this money really going to come out of if it doesn't come out of state finances?
So, Karthik, of course, it has to come from the state finances. It cannot come from, it's not a magic money that, he's
Right.
growing up, that tree of beans, and he's going to pluck out of that. But, to be fair to him and to be fair to any of the politicians at this point in time, most political parties across the spectrum are offering income support schemes and cash support schemes to women. And in many cases, these cash support schemes across states have been unconditional, what we call as an unconditional transfer, cash transfer, which is what he's saying, that if you are a woman who belongs to a certain income category, you would be eligible to get this benefit of, 1,000 rupees a month. So, many states are doing this. There are also other states that are offering, tied grants that, okay, if you go to school, like for example, in Maharashtra, and if we see, even in West Bengal, if you're sending your child to school, if you're not and even in Haryana, we see this, if you're saying my daughter will not get married before a certain age, then she is eligible to receive a certain benefit. So, these kind of conditional cash transfers also being experimented across different states. So I think the time has come to recognize the power of the woman voter. And I think women voters are really having their time in the sun. I'm quite happy about it, to be honest, as a feminist, to say that there are schemes that are now being designed to alleviate, women's economic position within the household, because we know that women are performing more than 10 times the unpaid care work within the households and the domestic work within the households. Women are doing 5.6 hours of unpaid care work every day versus men who do 30 minutes. So, if somebody is coming and saying, we're going to offer you 1,000 rupees or we're going to offer you 2,000 rupees, I think from a gender justice lens and from a lens of women's economic empowerment, that's fine. But of course, as an economist and as somebody who really believes that there should be a smaller state, there should be a leaner state, we have to look at ways of managing social protection and saying that who can deliver this social protection and support best. Is it the government, or is it, community-based organizations,
or the private
is
sector?
it through infrastructure investments rather than cash transfers?
Absolutely.
So
Well,
I think more research needed there.
Right, Mithali, more research, and of course I'm sure people like you will put that research together and we will really see some affirmative action in the space of true women empowerment. With that, it's time for a very short break right here on News9 Live. Mithali Nikore, thank you so much for taking out time this morning, and we'll be back with the stocks in news and what your trading strategy on those stocks should be. Joining me on the show is going to be Brijesh Ali, the head of technical and derivatives at IDBI Capital. Stay tuned to News9 Live.
You remember when someone had hit our car? I had got him to pay up for all the damage.
Yeah, so?
If something goes wrong in this guaranteed return share, I will complain to the exchange and get full compensation. See, there's an agreement.
Dad, you know what? Nobody can promise guaranteed high returns in the share market. Such illegal schemes are sheer fraud. The exchange will not give any compensation for these. That agreement is also useless.
सोच कर, समझ कर, invest कर.
Valuations can be frothy. Going public is almost like what some of us would like to say is the holy grail, right? IPOs are a trend, not a bubble.
Do secondary markets exist? Answer is absolutely yes, and it's been around for a very long time.
Valuations could be high or low, and valuations may correct over time, but IPOs are here to stay. It is basically a graduation ceremony of sorts. It is potentially where a startup stops being a startup and starts becoming an enterprise.
The IPO space has just started in the past 24 months. The startup ecosystem has been around for 15 years.
Fundamentally, if you have a strong business and you have predictability of cash flows and you can actually give with a fair degree of confidence where the business is headed, the market will reward you.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Welcome back to Morning Brief at 9, and all the trading action as the markets have opened coming your way, including the stocks which are in news and what your trading strategy on those stocks should be. Let's just quickly look at the mood of the markets this morning. Well, the mood not too good. Markets are down. The Sensex and Nifty are both down by about 1/3%. Bad action even in the Nifty mid-cap and small-cap space. You've got the Nifty mid-cap down about 0.5% and the Nifty small-cap index down about 0.62%. Not great street news coming this morning. The mood of the markets, is it to do with inflation? Is it to do with other factors which are impacting trade this morning? We'll get a sense with Brijesh Ail, who's joining us this morning. Brijesh, first up, mood check on the markets. Markets not opening strong this morning. What seem to be the triggers?
Yeah, morning. So basically, I think being the end of the week, slightly the selling pressure is getting more exhausted. So I think, but having said this, the level of this 24,500, 24,400 is the demand zone. So eventually, the last week we broke from this level. I believe somewhere closer to this level, that should be a market should find support, because directionally we believe that the levels of 25,000, 25,100 should be the directional view for the Nifty. And previously, if you have seen the last week, there was a very good breakout, and this entire week there was a sideways move. So I believe this was a breather. A slightly panic has been seen in the market, but I believe maybe at the end of the day, some recovery can be seen, and then post next week, I think some good buyers can be there. But then I'm not too worried about what the market is right now, the corrections I'm seeing. I think we are coming to the demand zone. 50-day moving average is somewhere close to 24,500, even though it is broken now, as of now in the morning trade. But I believe maybe during the day on a closing basis, it will be respected.
Morning trade, of course, the screen is completely red. All sectors seem to be in the negative. The IT pack, in fact, Nifty IT had hit record high yesterday. The IT sector is in the red. The banking sector is in the red, and so is the auto sector. A little bit of positive signaling coming from the FMCG space. And this perhaps seems to be in line with the rural inflation numbers that came out stronger than a month ago period yesterday. Let's just look at the stocks in focus. Brijesh, let me start with Zomato. News coming in on Zomato that the food delivery platform has announced that it has received a tax demand of over 800 crore rupees, and this includes both interest and penalty from the GST department in Thane. Now, in addition to this, the news on Zomato also is that Zomato's Blinkit has now launched another format called the Blinkit Bistro to compete with Zepto Cafe, which was announced just 2 days ago. On the charts, let's look at Zomato. Zomato, while on a year-on-date basis, it is up about 127%, but the action this morning on Zomato seems to be a little slow. Zomato is down about 0.5 percentage point. Trading strategy on Zomato, Brijesh.
Yeah, so one thing what I can see in the Zomato, 300 was the level where previously also the stock has witnessed a profit booking, and somewhere from the technical perspective, again the stock has reacted to that 300 level and is correcting lower. But if you see the long-term charts, it looks quite promising. So this decline can be viewed as a buying opportunity. The trend for the Zomato is positive. Maximum correction can be somewhere close to 270, 275. So this 275 is also the 50-day moving average. So I believe that this level should be respected. And then whenever it comes close to 270, 275, one can make a fresh entry in the Zomato. The directional view for the Zomato is somewhere close to 320, 325. That would be immediate trade setup. So I think this is an opportunity one can take a long bet. So 270 precise would be from the technical. Somebody who doesn't want to wait for the 10 points can also take this opportunity to take the long bet. But 270, another 10-15 point risk, one should play for 320 as on the higher side.
All right, so that's the view coming in on Zomato. Enter at 270 and perhaps look at an upside of 320 or thereabouts. Brijesh, I want to now bring focus to Reliance Industries and news that came in yesterday. Reliance Industries and Russia's Rosneft are sealing a $13 billion oil supply deal, marking major energy agreement. Now, this, of course, is big news. 500,000 barrels per day of oil is likely to be imported. What do you make of the Reliance stock this morning, and how should investors invested in the Reliance story take this news?
To be precise on Reliance, if you see from the month of October, the stock has corrected close to 20% from the highs of 1550 mark. And the trend after that, there has been a weak trend. Recently, there was some bounce in the Reliance, but that got restricted at 1320 level. And again, we are seeing the sell-off. And the low which we saw recently was close to 1220 levels. So somewhere the structure is not that positive. Today, the stock is also correcting down. There can be a small bounce, some 15, 20, 30 points bounce can be there, but then directionally, I think the stock can go back to 1220 levels. So that would be the immediate, whether it will break or we need to figure it out when it comes close to 1220 level. But definitely from this point, another 30, 40 points damage is there. So I would like to wait and watch. I like to understand whether that recent low, which was 1217, whether that level will be broken or not. Maybe over there, I will review the position and then take the fresh path. But then from this point, we'll talk about another 30, 35 points further lower.
All right, let's shift focus now to another stock that we are tracking this morning, and this comes by way of HAL. Now, yesterday, the government has signed a 13,500 crore rupee deal with Hindustan Aeronautics Limited for production of 12 Sukhoi 30 aircraft for the Indian Air Force. Brijesh, your view on HAL this morning, and what does this news trigger really do for the stock?
This news may not have that much impact, but then somewhere directly from the weekly perspective, the stock has already met with the bottom at 4,100 mark, and now it is seeing a bounce. So time frame would be little bit larger, but then the highs, which was 5,600, the level is likely to be retested in the coming sessions. Maybe it will take a little bit of longer time, maybe a month's kind of a time. 3-4 months kind of a view should be there, but then definitely the stock can go back to 5,600 level. So from now 4,600, we can talk of another 1,000 points rally. The swing which it took support was 4,100. So anybody who takes a long position should keep this in mind that 4,100 would be the technical stop loss. By any chance, if things go wrong and this doesn't sustain, and if 4,100 is broken, then one has to take a cautious view or maybe exit the position, or maybe one has to review their trade setup. But then directionally, the trend is positive. I think sooner or later 5,600 should be on cards.
All right, and Brijesh, let's shift focus now to HDFC Bank, and HDFC Bank has received an administrative warning letter from SEBI on December 12th. Concerns of non-compliance with certain SEBI regulations. The warning pertains to the bank's activities in merchant banking, capital issuance, disclosure requirements, as well as insider trading. Now, the warning follows a periodic inspection of HDFC Bank's investment banking operations and highlights alleged violations of the SEBI Merchant Bankers Regulation 1992. Any view on HDFC Bank this morning, Brijesh? What does this news and the stock in general hold for investors?
Actually, we have spoken to the HDFC Bank, our analyst, banking analyst has spoken, and they have said that this is not going to impact any financials. Like this may be a small, and they said they are going to cooperate with whatever the inquiries or maybe what things are going on. The financials are not going to get affected, and this is more to do with their IBDs or something like that. So, and maybe if I filter it from the technical point of view, during the last month when the HDFC Bank crossed 1800 level, there were lots of shorts during the previous series. So 1800, the core writers got they closed their positions, and now on the way down 1800, there's a lot of put writers who are there to support the market. There can be a marginal impact. The small correction which we are already seeing in the bank, this 0.5% down is it is just with the market mood. Maximum maybe another 10-15 points, but then I believe this 1800 level will be respected, and so on this HDFC Bank is one which is the outperformer in the bank Nifty. So I think it will take some small damage, and then it will again start moving up. So bias is positive. Maybe if you see 1820, 1830 level, I think one can take the long bet.
Stay long on HDFC Bank is the view coming in from Brijesh. Brijesh, I want to now shift focus to the FMCG sector. And after inflation data came in yesterday, cooler than a month before period and well below the RBI's upper tolerance of 6%. The rural inflation still continues to be sticky at 9.10%. However, even that data looks a little better than what the rural inflation data and the food inflation data in general has been over the last few cycles. In view of this, it seems that the entire FMCG stock basket today is actually the only sector that seems to be a little bit in the green, barring ITC at this moment, which is in the red. So I want to take your view first on ITC. How do you see the stock?
IDC, not too much of like what we used to do earlier. Like we used to take as a defensive space, we used to always take a long bet on the ITC. If I need to check it from the technical perspective, it is exactly at the 200-day moving average right now. 2 days straight, 458 is the level, and right now it has broken that. And the structure for the band ITC is slightly negative. So I'm slightly cautious. By any chance, let's say today being a weekly close, and if it doesn't sustain about 460 level and all that, so I think this level is going to act as a resistance zone. There can be a further damage of 20 odd points in the ITC. So 440 can be the next level where I will be taking a bet. Slightly cautious, not too optimistic. I won't take a long bet. I will wait for that 120 points of decline, and maybe 440 levels I will review. But it looks slightly cautious to negative bias.
Right. Well, ITC is down about 10% on a year-on-year basis. This morning also, trade is down at about 0.66%, a little more than half a percentage point on ITC this morning. Let's stay with the FMCG sector and look at another Nifty 50 company, which is Nestle. Brijesh, Nestle, what are your views, trading strategy for today and in general about the Nestle India stock?
So Nestle, they're already the stock has seen a very decent correction. It's in the overbought zone. So Nestle can see some trading bounce. 2300, 2400 can be the trading opportunity. One can play for directionally. Still, the stock is at the lower. It's in the downtrend. So it's too early to say whether the stock has formed the bottom or not. Logically, 2100 is a level previously from where the stock has taken the support. So that level yet has to be reached. So definitely there is a small trading bet opportunity, trading kind of a trade setup. But from the positional point of view, I will be little cautious. I won't take the positional bet. Trading bet can be seen towards the 2300, 2350 level.
500 levels is the view coming in. What about Dabur, Brijesh? I want to quickly, staying with the FMCG pack, I want to talk about Dabur as well. How do you see Dabur performing in trade?
So this 490, 500 is a multi-time frame kind of a support from the even from the monthly point of view. So 500 mark is the multi-demand zone. So maybe somebody who is taking to a very, very long-term view, it's advisable to take some trades, some bets, not too much of aggressive, but then some positions can be made with respect to Dabur, because this is the level from 500 to 600. This is a trading bet for so many couple of months. So one can easily play for that 100.2, and that's in percentage term, it's more than 15-20%. So that opportunity is definitely there, and it looks like the weekly and the monthly charts are the very deep oversold zone. So some bounce is expected. Dabur can be one safe bet in FMCG space.
All right. Well, Dabur is a stock to watch out for. Brijesh, before I let you go, I quickly want to get your view on the IPO frenzy as well. We have three main IPOs which are on the block right now. We've got Vishal Mega Mart, we've got Mobikwik, and we've got Sai Life Sciences. These are open for subscription on December 11th and will remain open until December 13th. Now, IPO Street has been a buzz, and in fact, this week, not just three, we've got 5 IPOs, and we also have another IPO of Bluestone coming up. What do you make of the momentum in IPOs, and what should the trading strategy for IPOs be?
So actually, this Mobikwik, we are not like too much of aggressive. We are not having a subscribe kind of a thing. But Vishal Mega Mart is something I think in a long-term perspective can be a decent stock to look into, right? So, but we are not, with all these three, we are not having any kind of a house view saying that whether we are going to say anything to the client. So it will be a very neutral stance from my side. But then Vishal Mega Mart can be one as we compare to the demand and other structures. There can be a long-term story can be there. So from that perspective, yes, but then officially we are not recommending like to subscribe. Maybe once it gets listed and then we see 2 to 3 quarters kind of results, then we may make entry.
All right, so muted view, a neutral view coming in on IPOs. Brajesh, I'll thank you so much for joining us right here on News9 on Morning Brief at 9. Pleasure having you, and we hope to see you keep coming back to us. Well, with that, let's move on to global headlines which are making news and made news overnight. Reliance Industries and Russia's Rosneft seal a $13 billion oil supply deal, marking major energy agreement. European Central Bank has cut interest rates again to stimulate sluggish Eurozone economy, this time by a quarter of a percentage point. China expresses openness to trade talks with Trump administration amid ongoing tariff tensions. And Donald Trump has been named the Time magazine's Person of the Year 2024 for political influence. After the US, this time UK regulators are delaying Shein IPO amid environmental and labour practice concerns. And organised crime rings in Ecuador, fuel rising theft of fuel from Petroecuador. In a bold move, Australia has moved to mandate payments from tech firms for news content to boost journalism. Korean Air has completed a landmark acquisition of Asiana, creating Asia's largest airline. And protests escalate outside South Korean President Yoon Suk-yeol's residence amid impeachment calls. Details of these stories will come up on the other side of this break.
If it's a cancer, then what?
It's very distressing.
Anyone can have cancer.
Mentality है कि ये बीमारी मुझे नहीं हो सकती.
There's a thing called cancer is right inside me.
सबसे पहले जो होता है ना, डर जो होता है कि now it's the end of the world.
My life went upside down.
Stigma associated with it, which is very scary.
In our country, more than 14 lakh people get diagnosed with cancer every year. Out of that, more than 9 lakhs die every year because of cancer.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
The section is called The Bit of the Empire Striking Back. It is not me who said it, it's Mr. Tata who said it. And normally you don't expect him to say that because he's very polite, he's very understated. But at a weak moment in the speech in Cornell, he said India's acquisition abroad made by Tata Group is kind of empire striking back. Please understand. Mr. Ratan Tata is a very, very patriotic man. Extremely nationalistic. He had the nation's interest first and everything else second.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching Morning Brief at 9 with me, Karthik Malhotra. It's time now to shift our focus to global stories making headlines today. Let's begin with Rosneft and the deal it has inked with India's Reliance Industries. Well, Reliance Industries has signed its largest oil supply deal with Russia's Rosneft to supply nearly 500,000 barrels per day of crude oil, marking the largest energy agreement ever between India and Russia. According to sources, this 10-year agreement is valued at approximately $13 billion annually based on current oil prices. Take a look at this story.
Russia's state oil firm Rosneft has agreed to supply nearly 500,000 barrels of crude oil per day to Indian private refiner Reliance. That's according to 3 sources familiar with the matter. It's reportedly the biggest ever energy deal between the two countries. The 10-year agreement would be worth roughly $13 billion a year at today's prices. It would also further cement energy relations between India and Russia. That would be a boost for Russia, which is under heavy Western sanctions over its invasion of Ukraine. Rosneft did not reply to requests for comment. Reliance said it works with international suppliers, including from Russia, and deals are based on market conditions. The company declined further comment on commercial matters. The deal comes ahead of the planned visit by Russian President Vladimir Putin to India. India has become the largest importer of Russian crude after the European Union, which was previously the top buyer, imposed sanctions on Moscow. India has no sanctions on Russian oil, so refiners there have cashed in on the cheap crude supply. Competition among oil producers for a share of the Indian market is hot because it's one of the fastest growing energy markets. It's becoming more important as a driver of global demand as growth in top importer China slows.
Moving on, the European Central Bank has reduced interest rates for the 4th time this year, aiming to stimulate economic activity amid a sluggish recovery. The cut reflects persistent challenges in maintaining economic stability across the Eurozone. Take a look.
For the 4th time this year, the European Central Bank has cut interest rates, this time by 0.25 percentage point. It kept the door open to further cuts as growth is hit by political instability at home and the threat of a fresh US trade war. ECB Chief Christine Lagarde.
We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path.
The ECB has been easing policy as inflation worries largely evaporate. The debate has now shifted to whether it's cutting rates fast enough to support an economy that's lagging global peers. Predicting that inflation will be back at its 2% target in early 2025 and that growth will remain sluggish, the ECB lowered its deposit rate to 3%. It also changed its guidance, likely to be taken as a hint of further rate cuts. The ECB's earlier policy statement had omitted a previous promise to keep policy sufficiently restrictive. Some say this signals a return to at least a neutral setting that neither stimulates nor slows growth. But this signal was less forceful than many economists had expected, especially as it came with a warning that domestic inflation remains high. The ECB warned downside risks remain, with Germany facing an early election, France struggling to find a stable government, as well as President-elect Donald Trump threatening punitive tariffs.
Moving on now to the 2 largest economies in the world that are locking horns over trade tariffs and tensions building up. Well, China has now expressed that it is open to engage with the economic and trade team of the upcoming Trump administration, signaling a willingness to address ongoing trade tensions. Addressing the media, the spokesperson for China's Ministry of Commerce reiterated the country's consistent stance against unilateral tariff increases. He emphasized that China is keen on properly managing differences with the United States and fostering stable, long-term bilateral economic and trade relations. Meanwhile, Time magazine has named Donald Trump as 2024's Person of the Year, citing his major political influence. Trump reacted, calling it an honor for our movement, reflecting his enduring role in shaping US politics and policy discussions.
Well, thank you very much. This is an honor, a tremendous honor. I brought some of our compatriots along with us. They're going to do a beautiful job for you for the next 4 years. And it's really been something very special. And I have to say, Time Magazine getting this honor for the second time. I think I like it better this time, actually, because this is a double, because usually they don't coordinate the Man of the Year or the Person of the Year with the ringing of the bell. And brilliantly, you picked them both at the same time, and you were all friends, and you said, let's do it. And it takes one trip. It doesn't take two trips. That's okay.
Donald Trump there on being named the Time Magazine Person of the Year. Shifting gears now, UK regulators are reviewing Shein's IPO after NGO challenges raised concerns over environmental and labour practices. The decision has delayed one of the largest anticipated public offerings this year, highlighting the demand for greater corporate accountability. Take a look.
Britain's financial regulator is taking longer than usual to approve fast fashion retailer Shein's IPO. Sources have told Reuters that's because it's checking its supply chain oversight and assessing legal risks. It comes after an advocacy group for China's Uyghur population challenged the listing. Britain's independent anti-slavery commissioner has also raised concerns within government over a Shein IPO. It's due to allegations about labour practices at its suppliers. Shein sells $5 tops and $10 dresses worldwide, with most made in China. It filed confidentially in the UK in early June for a London listing. Two other sources said Shein is also awaiting approval from China's securities regulator for its London IPO. The advocacy group Stop Uyghur Genocide announced a legal challenge in June. It sent Britain's Financial Conduct Authority, or FCA, a dossier alleging Shein uses cotton from China's Xinjiang region. The US and NGOs have long accused China of human rights abuses in the Xinjiang Uyghur Autonomous Region. They allege Uyghurs are forced to work producing cotton and other goods. Beijing has denied any abuses. Shein declined to reply to Reuters' questions about the FCA process. The company said it has a zero-tolerance policy for forced labour and is committed to respecting human rights. The FCA declined to comment on the listing and any delays.
And in a bold move, Australia plans to legislate mandatory payments for tech firms using news content. The law targets platforms failing to compensate local media, aiming to boost journalism while addressing imbalances in digital media revenues. Take a look.
Big tech firms face paying millions of dollars in fines under new government rules in Australia. That's if they don't pay the country's media companies for news hosted on their platforms. It puts pressure on global tech giants like Facebook owner Meta and Alphabet's Google to pay publishers for content. Stephen Jones is Minister for Financial Services.
The News Bargaining Initiative will be a new addition to that code, which will create a financial incentive for agreement making between digital platforms and news media businesses in Australia.
He added the platforms at risk will be significant social media sites and search engines with an Australian-based revenue over $250 million. Tech companies condemned the plan. Meta said the proposal fails to account for the realities of how their platforms work. They argued most people don't visit their pages for news content, and that news publishers voluntarily choose to post content on their platforms because they receive value for doing so. A spokesperson for Google warned the decision risks the ongoing viability of commercial deals with news publishers in Australia. The proposed new rules come as Australia toughens its approach to the mostly US-based tech giants. Last month it became the first country to ban children under 16 from social media. Canberra also plans to threaten the companies with fines for failing to crack down on scams.
Well, on Morning Brief at 9, I will now leave you with this story coming from Korean Air, which has now made it Asia's largest airline. Take a look at this story and stay tuned to News9 Live for all news updates right here on News9 Live.
Korean Air said Thursday it has completed its long-drawn-out acquisition of local rival Asiana. That creates one of Asia's biggest airlines. The $1.3 billion deal was first announced 4 years ago, making it the longest time ever to complete a tie-up between two carriers. Progress was hampered by competition concerns. Korean had to make significant concessions to mollify watchdogs around the world. That included handing routes to other airlines and selling off Asiana's cargo business. Now the enlarged group looks set to account for just over half of South Korea's passenger capacity, and it will rank 12th among world airlines, measured by international capacity. That's all according to a Reuters analysis of available data. Korean says the takeover will not mean layoffs. It says Asiana will be run as a subsidiary for 2 years before the companies are fully integrated. The new entity will then retain the Korean Air name, but under new branding. A single low-cost carrier will also be created as part of the reorganization.
Considered a wonderful product when it was invented. It solved many problems of human lives. We are talking about plastic.
Did you know the plastic in your house is as old as the oldest person in your family?
India almost produces somewhere around 9.3 million metric tons of plastic every year.
It is not